Stock market volatility. This is an interesting subject because a lot of people hear of stock market volatility, but they may not see it or witness it firsthand. Everything is a little different depending on what your actual experience is. So in this video, I'm going to talk to you guys about stock market volatility, but I'm actually going to show you my portfolio and kind of what happened today. The good news is I'm not in the red, which is good for me, but this is a prime example of stock market volatility. Now listen, if you're new to the channel, my name is Dwayne with My Investment Journey. On this channel, I talk about how to start investing in the stock market and I show you my investment journey. So be sure to subscribe and click that notification bell so you don't miss a thing. Okay, so I've been investing in the stock market since May of 2020, at least consistently since May of 2020. I got to a point where I reached a certain amount of money and I said, you know what, maybe I should stop pouring so much money into the stock market. So I did. And of course, as you can imagine, my experience since May of 2020 was not smooth because the stock market is not normally smooth. So what I'm going to do is I'm going to show you guys my portfolio, which is on the screen right now. So as of today's date, which is July the 19th, you can see that at the top right of the screen, and you could also see it at the bottom of the screen. Today is July the 19th. This is where my portfolio currently sits. Okay, and this is just today. So we're going to be talking about stock market volatility. I'll show you where I am today with my portfolio, and then I'll show you where I am overall in regards to when I started to reinvest back on Robinhood, which was May of 2020. So right now you can see my portfolio on the screen and it's valued at $289,966. 290,000 right now. Of course, it's live. It's after hours right now. So of course, this is going to be fluctuating as I am doing this video. So you can see right here, okay, we'll start at 8:30 a.m. because I'm Central Time Zone in Houston. That's when the market is officially opened. So you can see at 8:30 a.m. my portfolio is valued at $291,000. I was up $1,600, okay, which is always incredible. As the day progressed, you can see that by the time it was 9 o'clock, I was up almost $6,000. My portfolio was valued at $295,000. Then you can see here at 9:30, where is it? 9:25. My account was up $7,000. Okay, and so my portfolio was valued at $297,000. Now let's just jump to the apex, the climax of today, which once again June 19th. You can see here at 11:10. My portfolio was valued at $299,641. So almost $300,000, which obviously when you see that, you're like, let's go. Okay. You can see at that time I was up $9,700, which my entire portfolio was up 3.35%. The thing about these percentages, I think it's always super interesting because when someone says, oh, my portfolio is up 20%. Now, of course, 20% is relative because it has to deal with how much money somebody has invested in the stock market. So if someone says my portfolio is up 3%, in this scenario, for me, 3% happened to be $9,715, which is obviously, I'll take that 3%. However, if you had $100 invested and your portfolio was up 3%, that would only be $3. If you had $100,000 invested and your portfolio is up 3%, that would be $3,000. If you had $1 million and your portfolio was up 3%, that would be $30,000. So right there, you can see my portfolio was up $299,000. And then as the day progresses, of course, the stock market does what the stock market does. Went down to 293, and then at 225 it was 296, and then right here you can see it. It was $289,848. I was down $77, and right now in this moment, as I'm doing the video, it's valued at $289,943. It's currently up $17.61. Now, this happens a lot in the stock market. And when you start to invest, it's the most interesting experience. Now, 3 years after I started to reinvest on Robinhood, because initially I started back in 2016, 2017, lost some money, and then, quit. So when I started to reinvest back in May of 2020, of course, when my portfolio does this, goes up and down like that, normally my emotions do the same thing. And this is normal when you're getting started investing in the stock market. So that's why it's super important for you to make sure that you have solid investments. You believe in the companies in which you've invested. As a matter of fact, if I could give any advice, not that I'm the best advice giver, but if I could give any advice to someone that's looking to get started investing in the stock market, I would say that you should invest in companies, number one, that are well known, number two, that pay dividends. Receiving dividend payments is a way for us to make money in the stock market, and it takes away the sting of when the price goes down, because if it's a solid company and you really, really believe in that company, when the price is low, that is a perfect time to buy some more shares and bring your average cost down. And if you are invested in a company that's paying dividends, that means that the next time there's a dividend payment, you're going to get a little bit more because now you've grabbed more shares. Okay, so that would be my small piece of advice. A decent company to invest in that pays dividends would be like Pepsi or Coca-Cola. I mean, that is a solid company. Both of those companies have paid dividends for a very, very long time. And both of those companies have products that we see, products that we believe in. They even have products that we don't know, okay? Like a lot of people don't know Coca-Cola, the Coca-Cola company, they have juices, they have waters, and you're like, wait, what? Water, Coca-Cola? So it's imperative that you invest in a company that you believe in and a company that also pays dividends. And of course, being that we have access to Google, you can jump online and you can ask this question, does Coca-Cola pay dividends? And then of course you can go down this nice wormhole and start to learn a lot of things about that company or even different companies in the stock market. One of the things that I like about Robinhood is they will show you similar companies. So like if you're looking at a company, like for example, let me show you guys Apple here on the screen. If you're looking at Apple, when you scroll down, it'll have companies at the bottom that is not necessarily similar, but companies that it says right here, people also own, right? This list is based on the portfolios of people on Robinhood who own Apple, okay? And it says it's not an investment recommendation, but they show you. So this is, you're looking at Apple, and at the bottom you see Microsoft, Amazon, Tesla, Meta Platforms, which is Facebook, Google, which is Alphabet Class A, NVIDIA. And so you kind of get the idea. They kind of show you companies that are kind of along the line of what you're already looking at. All right, so the reason why my portfolio really experienced a lot of stock market volatility today is the amount that I have invested with Apple, Tesla, and also Lucid Group. I'll just show you guys a quick snapshot between Apple and Tesla. So right now you can see that Apple is trading for $194. I currently have 1,141 shares. Okay, so we'll go here where Apple at 1110 was $197.16. For easy math, let's say Apple is now $3 less. Well, I had 1,141 shares. 1,141 shares times $3 is $3,400. Okay, that's quite a bit of money, $3,400. So that's the $3,400 difference from where it was at 11:10 a.m. Now the same thing for Tesla here. If I show you guys Tesla, I currently own with Tesla 199 shares. Okay, so we have 199 shares right now. Tesla is trading for $279. At today's apex, Tesla was at $298. So we'll do 199 shares times $19. That is a $3,781 difference. That is huge. Just between those two companies, that's over $7,000. Okay, I think it's over $7,000. I don't remember what the deficit was with Apple. And then here we have Lucid, right? Lucid Group. So Lucid Group at 925 was $7.67. At the time, I currently have 8,853 shares of Lucid. So we got $7.67, and we're going to subtract that to what it is now. Let's just call it a 50-cent difference. Okay, so we'll do 8,853 times a 50 cents difference. That is $4,000. Okay, so just those three accounts alone, okay, we're talking about an $11,000 difference. That is huge, and that's how obviously you can experience stock market volatility. Once again, when this happens, you have to know that the investments that you have invested in are solid investments. And the more you have your money in the stock market and the more you watch what happens in the stock market, even if you're watching only a couple of companies or you're watching one company, you're going to understand that the market doesn't continuously go up in one day. It just doesn't keep going up, 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 and then the market closes and it's up. Like, that doesn't happen. Like, it goes up, it goes down, it goes up, 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 down a little bit, down, down, down. You know what I mean? And so you'll kind of learn when you can, if you're looking to take some money off the table or sell and make a little bit of profit and hope with your fingers crossed to come back in at a cheaper price, right? You could do that, but like, you only have knowledge of this the more you pay attention to what goes on in your portfolio. I'd mentioned in the beginning of the video that I would show you my overall portfolio. So as you guys can see, just for grins here, we're going to look at what's happened in my portfolio for the last month. So as you can see, the portfolio is up $31,000 in the last month. The last 3 months, the portfolio is up $74,000. Year to date, so that's from January 1st to right now, July the 19th, my portfolio is up $151,000. Now, it's cool to look at it now, right? Because it's up $151,000, not overall. And then of course you have from basically July 19th to July 19th, my portfolio is up $58,000. And then here we have all time. Once again, I started to reinvest back here on May of 2020. Since May of 2020, I have invested $260,000. Okay, so right now you could see my portfolio is at 289. So let's say I'm in the green, 29,000. Okay, but you could see the journey here my portfolio has taken. Right at this point here, I was down 63,000. Okay, and at this point here, March 28, 2022, I was up 43,000. And then here we go. Here's the kicker. I was all the way down January 2nd, 2023. I was down $130,000. Now I'm going to let you know, I didn't do anything different. I didn't like sell my positions and just try to realign. Okay. I was down $130,000. That's life-changing money, right? But I kept my position and I held on because I believed in the investments that I have in the companies that I've invested in. And then now today I'm at $289,000. So stock market volatility is very, very real. And it's imperative that you are confident in the investments that you have made. If you're looking to get started investing, and let's say you don't want to pick any companies, the best thing to do is invest in an ETF. And there are so many different kinds of ETFs out there. There are ETFs that are strictly just in the health profession. There are ETFs that mostly is focused on technology. There's ETFs that's mostly focused on growth. And an ETF is basically a collection of companies, right? So I'll show you guys one just so you can see. So I'm going to click on VGT, which is a Vanguard information technology ETF. And this is a perfect example, right? So you purchase an ETF the way you do a stock. So you can see right here that this particular ETF has 325 different companies. That's huge. So the reason why you would invest in an ETF is you have automatic diversification, right? And then of course they tell you the top 10 companies in this particular ETF are companies that most of us know. You have Apple, Microsoft, Nvidia, so on and so forth. So there's 325 companies in this ETF. When you spend $100, it's split up across 325 companies. Now it's not split up evenly because that's not how the percentages are distributed, but you get the idea. An ETF is a decent place to start, and if that ETF gives dividend payments, that's also a very, very good thing. All right, that's going to be it for this video talking about stock market volatility. Smash the thumbs up if you haven't already. If you haven't subscribed, also subscribe. All right, once again, my name is Dwayne with My Investment Journey, and I approve this video. I'll see you in the next video. Until next time, Take care and be blessed. Peace.